Well, season's greetings, everybody. And in case you're thinking that I look like this because I went into an old boys bar dressed like this, that wasn't really what happened. It was a Mohs procedure. I suspect some people on this have had those, and this is my second one of the last few months. I had one back in August, and this one was a little bit bigger deal than I was expecting. And I guess I would just use this as a second chance to emphasize how important it is for you all to get checked out, especially those that are in their 50s and 60s and 70s, and even some of the on the call that are on the Zoom that are maybe got an 8 in front of their number, their age. And we have one of our team members who actually, even though he's only in his 40s, just had a similar procedure. Fortunately, it was precancerous, and but it's just very, very important to be checked if anything looks suspicious and get it early because skin cancer is so treatable if you get it early. But anyway, so I apologize for the shiner looking like I did get in the round with in the ring with Mike Tyson. I'm always joking about my pugilistic skills, but those only are verbal and only involve or maybe written involving the financial markets and a lot of the absurdity that goes on in those. And so I'm just going to do, we've got some relevant slides to what I just said. We're going to do a quick lead in here with some visuals and then turn it over to you all to ask me whatever you want to ask. But I think it's always good to kind of warm things up with some things. And obviously the markets have been rather interesting this week with big sell-off and then a nice rally today. But I think what's really important to realize is just how expensive this market is when you look at it in historical terms. And I realize there's a legion of pundits on CNBC and in the financial press that say, don't worry about it, embrace the bubble. Yeah, it's going to burst, but not yet. And you hear even some very good professional money managers who say, yes, this market's going to get cut in half, but the trend is still up. There's still enormous amounts of liquidity that are driving it. And frankly, I bought that argument a few months ago, but I think it's less relevant now. I think the liquidity is in the process of drying up, or at least we're seeing the cost of capital in terms of interest rates go up fairly sharply. So, be aware this is a very dangerous situation. We've got another one on that, price to sales, which this is, I know PE ratio is more commonly used than price to sales, but I think price to sales is more important. And that's because it's harder to fake revenue than it is earnings. There's a lot of earnings inflation that's going on these days, particularly a lot of the tech companies, which are able to exclude their stock options from their expenses. So the other thing is that sales tend to be much less cyclical than earnings. And that's critical too, because if you're in a kind of hyper-caffeinated economy, which I would argue we're in right now, the profits can look unusually robust. So profit margins are record breaking right now. So people are paying record prices for record margins, and that's a problem. And what you can see from this is actually the price to sales for the S&P 500 is now above what it was in early 2000. And so that's the beginning of this chart on the far left. And early 2000 was the peak of the greatest stock market bubble in U.S. history, which exceeded even 1929. So we are in some very rarefied territory here. And then we've got one more coming up about one of the warnings that's going on right now, which is insider selling. Obviously, insider selling is running at an extremely intense rate. And I don't have a visual on this, but the flip side of this is the amount of flows into equity, particularly ETFs, by retail investors, which have been just also off the chart. So you got tremendous insider selling at the same time that you have extreme amateur buying. Again, that's worrisome. I think that's a very bright red flag right now. Thank you. Red being an appropriate color this time of year. Okay, so this is, these valuation things have been looking concerning for a while, but what's happened here recently is that we've seen a real deterioration in the breadth. The breadth had improved, meaning the number of stocks that were participating in this rally had been broadening out, but then lately it's really narrowed down. And we'll see here in a bit how it's narrowed down even within the Magnificent Seven. But I'd say this is a classic warning signal that we could see a very near-term correction and not one that's going to be somewhere down the road. And I do worry that there's so many people that think they can get out in time or at least reduce exposure in time that when it really does reverse, there won't be much of a warning. So be advised. All right, let's take a look at our next one here. This is a pretty amazing one that shows the difference between NVIDIA and Tesla. So NVIDIA, some people have joked and said this is a stock that's actually an asset class because it got up to what, $3 trillion market cap here recently, which is bigger than most stock markets in other countries. But starting in late June, and we did kind of warn about this back then, NVIDIA really kind of hit the wall, and it has done very little since then. And yet Tesla, which has some very challenged fundamentals, but of course Elon Musk is super tight with Donald Trump, and that's viewed as being all that you really need to know for the bull case in Tesla. But we won't go into that, and I don't think unless people want to ask about Tesla and their very challenged competitive situation. But it's become an unbelievably speculative market here lately. I mean, what's really been going nuts, of course, is crypto, and I'm not really picking on Bitcoin. It's been very strong, but actually compared to the really poor quality, I mean, virtually worthless cryptos, Bitcoin has lagged tremendously versus, say, Musk's favorite Dogecoin. All right, so that's enough on that topic. Let's go to what's behind. We hear all the time, I'm sure, American exceptionalism. And it's pretty ironic when we feel like the country's got as many, very intense problems, almost existential challenges that we're facing right now, and yet we're considered to be the envy of the world. The Economist had us on the cover, with one of their, the U.S. dollar, wad of U.S. dollar bills taking off like a rocket, and seen so much coverage of just how strong the U.S. is relative to the rest of the world. But what gets overlooked usually is that where we've really been exceptional is when it comes to fiscal recklessness, basically government spending that's just gone bonkers, to use a highly technical term. And if you look at the last year, and for example, I mean, last year the government was running huge deficits, basically, in the $2 trillion close to it range. But government spending year over year, now this is not deficit, this is spending, is up 20% year over year. And look at this package that was just announced, the spending bill that they tried to get through. And one of the interesting, let's go to the next visual here. One of the interesting things is how Donald Trump, who's obviously not even in office, seems to be running the country along with his cronies like Elon Musk. So they basically did bring down this latest supposedly bipartisan spending bill that was 1,500 plus pages long and just riddled with pork and wasteful spending. And I think they had every right to try to stop it, but it is amazing they're able to do it. But then their bill failed too. It's incredible that Congress, even with the deficits that we've got and the accumulated $34 trillion of federal debt, which doesn't include another 100 trillion, by the way, present value off budget entitlements, that these guys think they can continue to spend like right in the middle of the pandemic. It's just it's unbelievable. It can't go on. And when it stops, that's going to have an impact on the economy, on the stock market, on profit margins. Because if you don't know this, big government deficits are rocket fuel for corporate profits. That's another thing that I don't think gets enough focus is how real are these corporate profits being reported. I already talked about how the tech companies can play games with it, but also this government spending is just it's just a tremendous boost to corporate America. Okay, enough on that one. So I do want to talk a little bit about uranium, and then we're going to actually talk with Dave Klug, who's on here, who's a nuclear expert. But uranium I've been on this for a couple of years. It did great, as you can see in this chart. So this is a 5-year chart of uranium, and this is the main uranium ETF. And pretty easy to find what that one is, but you can see it had that enormous spike up to 25 from it was like 11 when I first wrote it up. And we did take profits along the way and highlighted that you might want to cut back. Some people said, oh, no, don't cut back. Uranium's going to keep going, which I think it will. I think it's got another upleg coming, but look how much it's corrected despite having tremendous fundamentals. So from 25 to 16. So if you're looking for a way to play kind of year-end sloppiness, I think this is one of them. And if we look at the next visual, we'll see that it's trading at about a 10% discount to net asset value. So you're really buying a dollar's worth of uranium for 90 cents. And what this chart is showing is that frequently it gets up to face value or parity with the underlying value of the uranium. So this is a really good entry point in my opinion. And also I wanted to point out, I know some of you on this know who Gehring and Rosenzweig is. They're one of the best of the natural resource research entities, and they also manage money. They've been around for decades and, well, in different roles within the financial industry. I think the company's about 15 years old. but they have recently put out a piece that's got a very good 2.5 page overview of what's happening in nuclear energy and specifically with molten salt reactors. And that's a good entry or intro to my friend Dave Klug, who's on here, and he's with a company called Micronuclear. Dave, you were a little younger in this photo, I think, maybe just 2 or 3 years ago.
Conservative.
And, so, but you don't have any eye patches on like I do. And Micronuclear is a company that some of you are aware of that I'm very supportive of. I'm an investor. It's not something you can invest in. This is not any way of pitch. You can definitely invest in uranium. But Micronuclear is public, I'm sorry, private right now. Someday we hope they'll be public. But they have got some of the most fascinating technology in the molten salt reactor area. And so, Dave, maybe just give us a 5 minute quick overview, and then we'll get to the Q&A section.
All right. Thanks. And I also with us today is Paul Marotta. Paul Marotta is the CEO of Micronuclear. And Paul, can you just let me know that you're on and your mic is live?
I'm with you, Dave.
Roger that. Okay. Yeah, David. Yeah, the uranium. What is going on with the uranium is really interesting, and Paul and I go back a long, long ways in the nuclear business. As David knows, I'm a product of the Navy's nuclear power program, and so I'm not going to go into that story. However, we've been following nuclear for a long time, and we've seen this trend that has happened over the last 10 to 15 years with respect to green energy. And we know that the word is getting out that the green energy, alternative energy paths that we're taking right now, the alleged renewables, aren't as green and renewable as we thought they were. Solar and wind power is only available about 20% of the time, so the rest of the time it's sitting idle. Any of you that do any substantial traveling across the country and see wind farms, you can see that yourself. If you watch the news and see what happens in a hailstorm with a solar farm, you can see the same thing. So the recognition is coming back to nuclear. And what Paul and I and Micronuclear represent is the culmination of 70 years worth of research into what makes an appropriate nuclear reactor today. And as David said, we have a molten salt reactor that we're calling a molten salt nuclear battery. And there are some specific things that are associated with that make us attractive. And I'm going to turn it over to Paul in just a minute, but I want to remark about uranium. As you folks probably know, the United States only has about 8% or so. I think the number is 8%, David, of the world's uranium deposits are in the U.S. Australia has a lot. Russia has a lot. But let me tell you that it has to be mined, it has to be processed, and those mines require electricity to do it. And that electricity is not going to be from emission types of plants. Eventually, they're going to have to be nuclear themselves. So even the production of uranium is going to be tied to uranium supplying power. And David, you had a thing that I saw today about copper. We're always going to need copper. It is still the number one conductor that we have on the planet. We have substantial copper deposits in the United States, I believe, and we recycle copper. But I would not rule out copper or uranium, and that's just my opinion from not being an expert like you guys are. So, with regard to the molten salt nuclear battery and what makes you unique, I think it's appropriate to turn this over to Paul Marotta, Dr. Paul Marotta, CEO of Micronuclear, and I'm going to go back on.
Yeah, I don't want to take a lot of time here, David, but for just focusing on the aspects of fuel, Dave mentioned that we're a molten salt reactor design. Our system is a dissolved fuel system similar to the one that was designed, operated, and run back in the 60s at Oak Ridge. And the reason we selected that fuel form is not because there's anything wrong with the other fuel forms out there that are available, such as TRISO, but we started with the end in mind. So we know that after a reactor operates for several years, there's still good fuel left in that bundle or in that material. And so we selected the molten salt dissolved fuel type because it provided the best opportunity to recover that unused fuel. And I'll just keep it as simple as that. There's other obvious things that we've designed into this thing to be more reliable, but since we're talking about fuel today, let's just keep it at that.
Thank you, Paul. And that is actually one of my favorite topics. It's there's a great line that nuclear waste is only waste if you waste it, and that's I think that's so true. And actually, I didn't really finish on the Gehring and Rosenzweig report that if anybody wants it, you can email us or you can go directly to their website. It's I don't think it's their most recent publication was the one right before, but a point they make in there is that molten salt reactors can run on any type of fuel, and there is a distinct possibility of reusing spent nuclear fuel, not just in micronuclear as molten salt reactor, but in small modular reactors in general, even in, I guess, large scale reactors, because, Paul and Dave, correct me if I'm wrong, I think France has been doing that for a very long time, reusing their spent nuclear fuel. Isn't that correct? Can you hear me?
Well, yeah, Paul, you would know more about that than me, but I do know that France has had an active recycling program for a long time. I'm not exactly sure how they're doing it. Paul may be able to provide some better information.
Well, essentially, the fuel forms that exist today, and the one I mentioned, TRISO, are designed to be accident tolerant, meaning you could throw the kitchen sink at it and it maintains its condition in a safe condition. So when you design something to be unbreakable, and then at the end of it, you need to recover some of those materials that are within these particles or pins or spheres, it becomes incredibly challenging to undo what you just designed to be unbreakable. So in contrast with the molten salt, the uranium is in solution with the molten salt in our design and is actually flowing. So if anyone's interested to get a little background, certainly check out our website. But then certainly, I think we have a few links in there back to the Oak Ridge data. As you can see, it's a fairly well documented design. That's really where the MSNB that Dave mentioned got its roots. That's where I started.
So
And
Oak Ridge, if you don't know, is was part of the Manhattan Project. It's in Tennessee. And originally it was run, well, starting right after the war, it was run by Alvin Weinberg, who really pioneered the molten salt reactor technology. I think I saw a message come across that this has been around for quite a while. It's been around literally it's been operating since the 60s. But they shut it down, I believe, in 1973, something like that. But it operated for about somewhere in the 5 to 8 year range with very good results. So this is by no means revolutionary, although Paul, who's too modest to say this, has come up with a very elegant design to eliminate things like the pumps and valves, which are so prone to failure. And the great thing about these molten salt reactors is if they lose power, they basically just shut down. I'm doing this very simplistically. I'm a know nothing really when it comes to nuclear energy. These guys are the experts. But Paul, I think it's fair to say that these are walk away safe.
Well, we said that, and we've had others look at our design and say that. So yes. And there's don't get me wrong, there's still work to do, and we're hard at it, you know. But when you have a design that is built on something that worked, you're making it better, and that's way better than just starting from scratch or you hear a lot about fusion. Well, that's great, and it should be in the research realm, but that's really where it should be. And as opposed to what we're talking about is something that actually had a physical presence and did what it was designed to do. And we took that design and furthered it and have a more reliable and uh, more I'll use your term, elegant solutions. We think so.
I think so too, but what I think doesn't matter very much. But you've got some other experts who've looked at it that have been extremely impressed and have approached you and would like to do more work with you. So that's very encouraging. So I want to move on here, but just one last thing that I wanted to.
I'm sorry. Can I just jump in with one quick question? Barkley.
Yeah, Barkley, hold this just one second. Just let me finish this, and then we'll turn it over to Q&A. So you can be the first question. But just this idea that it has well, why did it happen this way? Why did the molten salt reactor get ignored for 50 years? And a lot of it had to do with the nuclear navy and how the nuclear navy developed, because that really was the impetus for the civilian atomic energy program. So these light water reactors that really were designed to go on submarines and aircraft carriers, they became the dominant design. Hyman Rickover, who many of you know that name, he was the father of the U.S. Navy nuclear program, and he was a very strong personality. And frankly, he pretty much outmaneuvered Alvin Weinberg. And it's really a fascinating story that, over time I'll share more details with you. But okay, Barkley, go ahead. You're on mute. Barkley, you got on mute.
Okay, I'm
There
back.
you go. You're back.
Yeah, my question for David and Paul, is that, there's certainly a lot of hype at the moment about quantum computing and nano nuclear. There's a company out there publicly listed called Nano Nuclear that says that they're going to put nuclear reactors on the back of trucks and put them in Togo and Rwanda and godforsaken places. And I was just wondering if David and Paul had an opinion on that company, because, their management are all pump and dump historical bad guys.
Yeah, I'm not familiar with that company. Barkley, sorry. But the physics, the reality of the physics are for, I'm talking about a fission reactor, constrains the geometry and also such that, and I don't want to get into quantum, I don't want to get into physics here, but such that the size of a fission machine has limits in terms of how small it can be. So let's suffice it to say, the design for the characteristic design for something that we're talking about fits in a fairly small space, but in terms of driving that space small enough to fit on a truck and drive around and get smaller than that, I think you change from a molten salt type of reactor to maybe some of the ones, the isotope reactors that are used up in space and so forth, to get smaller, which most likely wouldn't drive enough power to provide the propulsion you need for a heavy vehicle.
Yeah,
I just want to add that sorry, Jay, I just want to make sure that the people hear that your molten salt battery is basically the size of a container, like a container you see going by on a rail car or is put on a ship. So they're pretty small, but they're not as small as you're talking about.
Yeah, I think
Before I'd have one in my garage, let's be honest.
I just,
Yeah.
I'm a little skeptical of this company just because of the lack of quality of the people running it. That they've, been historic small cap, micro cap Vancouver pump and dumpers. So it's got almost $1 billion market cap. I was wondering whether it could possibly be real,
Well,
or
Mark Barkley,
whether
the market environment we're in right now. I mean, with Dogecoin hitting a $50 billion market cap recently, even though it's a joke. But one that you could look at, and I'm not saying their technology is a fake or anything. I know that some of our people used to be with this company, NewScale, down in Corvallis, Oregon, and the symbol is SMR for obvious reasons. But it recently hit a market cap of 8 billion, and I don't think they're close to profitability or really even first vision. But they do have real technology, from what I understand. But it just got hugely over promoted when it hit 8 billion. So this space, because it is so sexy, lends itself to a lot of, you would say, the pump and dump process. And that's why I want to emphasize that we're not here to pump micronuclear, because you can't even invest in it. I guess you could privately, but that's not the point of this at all. I do think that there are major breakthroughs coming in the SMR area, and there's going to be more than one winner. But I'm quite hopeful that micronuclear is going to be among the winners. Hey, we better, well, sorry, you want to say one quick thing? We better get to the broad Q&A.
Yeah, one very quick thing. Yeah, the point is that these microreactor technologies are scalable. We're going to be building one initially as a test prototype of 400 kW. but we can go up to 10, 20 megawatts thermal. And of course, that reflects the size. So you got to talk when they say we can put it on a truck, you got to sort of look at the truck. It's not going to be a pickup truck. It can be a semi, but we're looking for us, we're looking at about 10 megawatts. But we're going to start with 400 kW. And of course, there is a scalability to have to do with that. And as Paul said, that has to do with the physics of the situation. Right. That's
Thank you, guys. Well, hang on just in case there's at least Dave. I don't want to keep Paul too long, but if there's any other nuclear related questions, but I want to make sure we open it up.
sure. Okay.
What else do we have, Adam? Who else?
If anyone has a question, feel free to raise your hand or just unmute and jump in.
Okay, now let's put that in there.
Hi, Chris, go ahead.
Yeah, Papa's gotta go pee-pee. Papa go pee-pee. I'll be in here pee-peeing. Okay?
I don't think he actually had a question. Rajiv, go ahead.
Okay.
Hi, thanks for doing this again. Question was
Okay, Rajiv.
kind of referenced earlier about copper. My curious question, given the changes with the whole perception of ESG and the EV, and I know you mentioned before about the positive benefit for palladium. I'm kind of curious, what do you think about the impact will be on copper kind of more over time? I know Gary and Rosenzweig had said they're more bullish short term, but they're not as bullish as others in the intermediate term. So I'm kind of curious what your thoughts were on this.
Right. I hear that. I mean, I think that what's changed in the copper story is the rapidly slowing growth rate of EVs. And I'm talking about pure EVs as opposed to hybrids. Hybrids really look like that's where the market's going. I mean, certainly if you look at the Chinese EV makers, it's their hybrid sales that are accelerating. Even if you look at companies like Toyota, they make money on hybrids, and I think hybrids have won the war. And I don't think that's been broadly appreciated by the market. And that I think, I prefer palladium versus copper for that reason. Now, copper's got a lot of other uses, and there's still going to be traditional EVs built, and so copper usage is still going to go up, and it's pretty out of favor right now. So I wouldn't say I'm negative on copper, but I think I buy the Gehring and Rosenzweig view, which is that its fundamentals are still good, but they're not as good as we thought a couple of years ago. So, mildly bullish on copper, more so on palladium, because the view of palladium is that the world really doesn't need it much anymore because EVs don't use palladium. But actually, hybrids use more palladium than do traditional internal combustion engines. And palladium is very depressed, and there's some supply challenges there, like so many commodities. I think you can make a great case that demand is going to be much greater than supply. And that's really the case with uranium. I don't think most people are aware of how tight the uranium market is, because things like the megatons to megawatts programs, that's basically the decommissioning of the nuclear warheads that were converted into uranium that can be used for civilian power purposes, that's exhausted. And these big inventories that were left over when Fukushima happened in Japan and nuclear reactors were shut down, and there was this tremendous glut of uranium on the market starting in like 2012. And it took years and years to work that off, but now it's been worked off. And you've got over 60 new large-scale nuclear plants under development around the world right now. And, where's that uranium going to come from? So I would say when I look at the demand profile and supply profile for copper versus palladium, and particularly uranium, I think the latter two look much more attractive.
Great, thank you.
Sure.
Jeff Harbaugh, go ahead.
Yeah, good morning.
Hi,
I
Jeff.
think I heard you guys say that you could use waste uranium already in storage, or waste fuel rather, in various places as fuel for the molten salt reactors. I guess with some preparation and reprocessing. My issue is, if you can do that, and doesn't that reduce the need for newly mined uranium? And to what extent would that be the case, recognizing that issue, if it's an issue, is years down the road? Thank you.
Well, I'm the one that brought that up, and I think both Paul and Dave would say, well, that's not the top of our list by any means. I mean, I think it's a very important aspect for getting broad support for SMRs in general and nuclear energy in general. But the reality is that it's costly. it's when our uranium is trading as inexpensively as it is in the open market, that's you're gonna have to have government funding, government subsidization, if you will, I believe, to get nuclear power producers to actually use nuke waste. But Paul, do you disagree with what I just said?
No, and again, let's just say it hasn't been done yet to get the fuel in a form where the uranium, the components of uranium that we're looking for in terms of what we could introduce into our fuel salt, is quite extensive. And so that's why could it? Yes. So the answer is, could it? Yes. But from an economic standpoint, more of what David's saying, and that was our hesitation with TRISO as well, to end up in that same boat 20 years from now. So.
And Paul, do you think nobody's brought up thorium yet, but that's a real hot topic in the nuclear world. Is that true of thorium as well? That it got lots of promise, but it's not ready for prime time?
No, the reactor design just changes somewhat, and I'm not going to go into that, but you need to. So back to the Oak Ridge days, they actually ran the thorium resultant, which is U-233. So the thorium needs to be transmuted to that before it's a fissile fuel, and that's that kind of information is available on the internet. So it's not. I'm not telling anybody anything new. There is a step there, so obviously it's there, and we could look at it down the road.
Yeah, let me add something to what Paul said about the cost of using waste fuel. Think of it this way: the nuclear power plants up until very, very recently have embedded uranium in some sort of a structural metal. We call it a cladding, and so it is inside other metal. And the cost in recycling that has always been, how in the world are you going to take that fuel, break it up into pieces, separate the uranium from the other metal, which implies a very, very expensive process of melting and processing and both chemically and centrifuging the uranium out of it. The French have been doing it. It's very expensive, but then again, I think the French, Paul, they don't have a lot of resources with respect to uranium. They didn't have much choice. At one time, I think France was 80% of their power came from nuclear, and that has changed recently, but still.
Still about 60.
Yeah, yeah, and so it's that kind of thing. With respect to thorium, it's called a breeder. You have to take thorium is readily available. There's a lot of it. However, like Paul said, you have to convert that into U-233, which is fissionable as a fuel, and you need to do that in a breeder reactor. And so you basically take a reactor that's undergoing fission, and you you infuse thorium into that, and by a process of breeding, then you get usable uranium. Okay, that is down the road. I think it may be there someday, but like Paul says, it's a long way off.
India has a lot of lithium, so as I understand it, India is making a big thorium push. But it really just is these guys, these experts have said, unlike me, who's a non-expert, it's the economics. And my argument is that uranium is undervalued here relative to these other uh, conversion options, which are doable, but just very, very expensive. And yet you've got this explosion, sorry for using that term, but of demand globally. I mean, other than Germany, I wrote that up today, that Germany has basically shut down all its nuclear plants again. They're just crazy. And they're burning wood, which they consider to be a green energy source and the dirtiest form of coal. But really the rest of the world, even Japan, is having a tremendous nuclear renaissance. So I think this is one of the biggest mega trends of this decade and probably beyond. All right, people have to have other questions besides about nuclear energy, though I love to talk about it.
We got a question. Oh, actually, Pete just raised his hand. Go ahead, Pete.
Hear me?
Yep, we can hear you.
Okay, terrific. I'm relatively new to the service, David, so this may be duplicative of something you've addressed before, and if so, I apologize.
No
I was
worries.
listening to an interview with Luke Groman somewhat recently, who
One of my
posited
favorites.
that my takeaway from it, I think it was his one with Grant Williams, or one of his recent ones with Grant,
One of my closest
where,
friends.
where he essentially said that the stock market going up is all but an imperative for the government, in that that's the source of marginal tax receipts, and that the deficit, as bad as it is, will just explode if the stock market wobbles and they lose, which I'm sure happened in 2022, they lose a big, or 23 from tax year 22, where they lose a big swath of capital gains receipts, and so he has been, for somebody who holds these sort of heterodox views, has been pretty bullish, is my takeaway, broadly speaking, because he just thinks as long as the government is pumping, is running these enormous 7% of GDP deficits, it's almost impossible to have a recession. Cuppy just came out the other day with a note that said something about, he thinks, and I don't put that much stock in it, but that he thinks Trump's going to run it hot and try for like 10% nominal growth, and just have huge inflation and big growth. And I'm wondering if you see something similar to this, where it just runs hot for the foreseeable future, with high inflation but high stock market too.
Yeah, well, you said a key term there, nominal. And I think that's the critical aspect to understand. And I would just give one real life example of the difference between nominal and real, because so much of the way we judge the stock market is in US dollars. And in an inflationary environment, those dollars don't really reflect, purchasing power, what you pay at the grocery store, for example. So the point I was going to make is that if you look at the stock market from the peak in 2000, at the start of the century / millennium, and then look at the returns on the S&P, which have been good, but in gold terms. So they've been good in dollar terms, but they've been actually negative in gold terms. So, and if you use gold as your currency, say this is real money, the dollar is somewhat of an illusion. It's a fiat currency. It's very subject to debasement, which we're doing, very aggressively these days in most of the Western countries, especially the U.S. But it's down in gold terms going back, basically 25 years. So I think that's important to remember now. If you said, because Groman has been very bullish on Bitcoin, and correctly so. What has the stock market done in Bitcoin? I mean, it's in a horrible, horrible bear market. So I think his point is, yes, and even bonds. He thinks bonds can have positive returns nominally. They haven't for 5 years, but going forward, I know he believes that the Fed is going to have to step in and basically start doing QE again. So, printing press money to buy the treasury market to keep interest rates suppressed. And that's all part of this game plan that he's describing, which is, some people call it financial repression, where you keep the interest rates artificially low, and so the government can finance itself, but bondholders, get clobbered, at least in real terms, again, maybe not nominal terms. So there's this big money illusion going on, and I think he's been one of the most ardent advocates of that's how the government gets its debt to GDP down. I mean, we did that, as many of you know, coming out of World War II, where for the first 7 years after World War II, we, kept interest rates suppressed. The economy didn't, to use your term, ran pretty hot. You had the Korean War in there too, which kind of stoked things. And then even out to the late 1970s, we had a situation where the economy was growing much faster in nominal terms than the interest rates. So we got the debt to GDP down from 130%, about where it is now, to 35% or 30% by 1979. Of course, there was a heck of a lot of inflation along the way. I mean, the inflation, the 1970s is remembered very unkindly because of how inflation got unmoored. And personally, I think this decade is going to look a lot like the 1970s. And you mentioned 2022. I mean, the market got clobbered in 2022. So you can get, even in the terms of a nominal, to use that term again, bull market, you can still have some really serious shakeouts when you get to the kind of extremes that we've seen lately. But I do think that if you peel back at the layers in the market, there have been a ton of stocks that have been absolutely crushed. So and this wasn't really true even 4 or 5 weeks ago. So there's been a lot of value restoration that's gone on in this nasty year-end sell-off that's been covered up by stocks like Tesla. Does that answer your question, Pete?
I think so. I mean, it seems to me that financial repression is just inevitable in some form or another.
Totally agree.
Given the debt levels. Just one last follow-up. When you say bonds, are you referring to treasure, like longer dated treasuries, or
Right.
is there, I mean, as opposed to short term, or as opposed to corporate bonds or high
Sure.
yield or anything like that?
No, you're exactly right. So in our income and bond portfolios, which actually is most of what Evergreen manages, we have been short duration really since the summer of 2020. Sorry, so a very long time. So short duration just means, in like T-bills or, 2 to 5 year maturities. And so, yeah, you get, people need bonds. It's just there are, bonds that are very subject to the damages of financial repression and those that are much better protected. So I think that's exactly right. But everything we're talking about, I think, is why commodities, which are so hated right now, are a really good place to be looking to for new investment capital.
Thank you.
Looks like Ken's got a question. Go ahead.
Hey, thanks, Deb, for doing these sessions. Quick question. As you look across the world, are there any international markets that look attractive? And just overall, as you think about investing outside the US, are there certain factors you weigh when you're looking? Is it just a pure valuation, politics, currencies, et cetera? Just be curious in how you think about international markets as you think
Well,
about
first of all, for those that don't know, international markets have lagged the US horrendously over the last decade, 12 years. And I can remember vividly in the early 2010s that the trend was to get out of America and particularly to go emerging markets because they had a so-called structurally faster growth rate. But they looked expensive to us relative to the S&P, which was only trading for about 12 or 13 times earnings at that point. But now it's all reversed. So you've got, the US stock market is like 70% of global market cap. It's just astounding how dominant we are, which again gets back to this thesis of American exceptionalism, which I think is based on very, very false assumptions and basically this tremendous federal spending. But, we've got some great tech companies too, but when they're trading at $2 to $3 trillion of market cap each, you got to say there's a lot of optimism factored in there. And there's some great tech companies overseas as well, like Taiwan Semiconductor. And what would NVIDIA do without Taiwan Semiconductor? Let's just say that China decides to blockade Taiwan, and I think that they're much more likely to blockade than invade. So it's not, I don't think it's at all a non-trivial risk. I think that's a distinct possibility if things really get ugly. But you look at markets like Korea. So to answer your question, you look at valuation, of course, and you look at currency. We'd like to ideally buy a cheap market and a cheap currency, and Korea qualifies. They've had a lot of political turmoil, but they've also got a lot of great companies, including technology. I think Brazil looks pretty interesting here. It's been a dog. The currency is getting hit. The US dollar is going up against a lot of currencies right now, and the Fed's moved, this hawkish cut that they just did, kind of an oxymoron. Here they cut interest rates by 100 basis points since I think it was September, and yet they're supposedly in a restrictive mode. But certainly open market interest rates are going up, and that is restrictive. But in Brazil, you've got got real interest rates of about 8%, so 8% above inflation on their government bonds, which is huge. They've got a very left-wing president, but he's kind of Biden-esque right now. If you had a regime change in Brazil, I think you'd get a monster rally in the currency and the market. And when you have 12% government bond rates like they do there and 5% inflation, that's the thing that set off our big bull market in the early 80s. As rates got so high under Volcker and inflation got subdued, and then the rates came down and the market was off to the races. I think Mexico is maybe interesting in that regard as well. But obviously with Trump and the king of tariffs, and his favorite word is in the dictionary is tariffs. Excuse me, that's problematic for all these emerging and overseas markets. As far as developed markets go, I think Japan looks good, mostly because the yen looks fantastically undervalued, although their central bank once again failed to hike rates. So that's caused the yen to fall back down. It's starting to rally a bit. But I think that's basically what you look for. Obviously, you look for regimes where there is at least a hope of better policies. Look at what's happened in Argentina, where after 100 years of mostly Keynesian, socialistic, communistic policies, they got a free market guy in there, and it's been very painful. But I think a real turnaround is underway in Argentina. Thank you for the question.
Thanks.
Mark Edinger, go ahead.
Mark, are you on mute? We can't hear you. You don't look like you're on mute, but nothing's coming through. Adam, while we're waiting for him, there were some questions that were emailed in.
Yeah,
A
we
couple
also
that-
got some in the chat. This is about natural gas.
Hmm.
U.S. producers and exporters of natural gas. What are your thoughts on them in the event Trump strikes a deal on Ukraine, which opens the spigot of Russian natural gas flowing into the EU?
Yeah, well, that's first of all, Russian natural gas is still flowing in the EU. It has been reduced, but it's not been cut off. So if that was to be fully restored, yes, I think that would be negative for LNG prices, which are, like $13 to $15 per million BTUs, which I know that sounds like a lot. It's really not a lot. I mean, it's kind of equivalent to like per gallon of gasoline. It's a very loose metaphor to use, but it gives you a rough idea. In the US, it trades for about 320, 330, something like that right now, which I feel pretty good about because, as some of you know, I was pounding the table on natural gas when it was in the low twos here not long ago. And some of these natural gas producers have really rocketed. But yeah, in general, I think that you're going to see growing demand for natural gas, actually fairly dramatic growing demand for natural gas. And part of that is related to these AI data centers, which are just tremendous energy consumers. And we're talking about small modular reactors with a lot of the tech companies either trying to get those online or to perhaps restart like 3 Mile Island. I think Microsoft's trying to do that. So these data centers need to have reliable power, and the renewables don't cut it. They're too expensive. They're even if they seem like they're cheap superficially, they're just the capacity and the energy density is so low, especially relative to nuclear, but even relative to natural gas. So I see, and if you look in Asia, natural gas is trading for 14, 15, like again, per gallon or per million British thermal units. And here it's in North America, and if you really want to see cheap natural gas, go across the border to Canada. There it's trading below two. I think it's about $1.60 right now. Unbelievably cheap. I know Doomberg, who's very negative on oil, is super bullish on natural gas. If anybody's listened to him, he thinks that the North American natural gas is the cheapest energy molecule on the planet, and I think he's probably right about that. So yeah, I like that area. And but if there is peace, if peace breaks out in Ukraine, I think natural gas prices will probably come down. So it's anything when you go into the commodity world, be ready for a lot of volatility, and you won't be disappointed.
So this next question is about uranium and ties into a thought that I had earlier on, which is that themes that Trump is sympathetic toward, such as tech and crypto, have been kind of moonshotting. But he's also sympathetic toward nuclear, and uranium hasn't. And so this guy's asking your thoughts on where the supply of uranium is going to come from and what price is necessary for uranium to incentivize more production.
Well, I think the answer to that last part is a lot higher than where we are now. How high? I don't know. I wouldn't at all be surprised to see if before long we have it, in the $120 per pound range, as opposed to, I think at this point it's sub 80, maybe 75. And somebody could look that up. I haven't actually checked that. I just know that that uranium ETF is really cheap right now, but it is trading at 10% below the fair value of the uranium they hold. But it's going to be a real challenge. I think we're going to have an acute shortage of uranium, and 40% of global uranium comes from Kazakhstan.
Yep.
And they're kind of in the influence, the sphere of the Soviets, or the Russians, I should say. Sorry, I had some flashback to my old days. But that's obviously, and they're having production problems. That's been one of the reasons that uranium rallied earlier in this year, is that their a big increase that they had told the world they were going to pull off is not materializing. And then you've got Russia, as Dave Klug said, not a big producer. I think it's about 8% or so, maybe 10% of global uranium, but they're a big part of the enriched uranium. So once you have that raw uranium, to get it to a usable state, you have to go through the conversion and enrichment process. And frankly, that's where the choke point is. Right now, there's not a lot of it. Somebody was going to ask about Honeywell. Honeywell owns Converdyne, which was actually shut down. And that's America's, I think, only significant. I mean, maybe Dave and Paul can correct me if that's wrong. I think that's our only significant conversion and enrichment company. And they have been restarted. Is that, sorry?
Go ahead, finish your thought, and I can chime in.
Well, it has been restarted, and they're talking about significantly increasing their capacity, but it has been a real choke point, correct?
And that's correct. Paul, are you still on? He's muted. Okay. All right. Let me add something to that, and then Paul can chime in too. From the deposit standpoint, uranium is a major it's a significant constituent in the Earth's crust. Okay, and as such, you are going to find uranium where you have igneous rock. Now that includes volcanoes, granite, and anything that decomposes from granite ends up in deposits, even in sandstone and volcanic breccia, all kinds of things. So the point is, there's a lot of uranium in the Earth's crust. Now, yeah, we have 8% of the world's deposits that we know of. But to your point, David, uh, we haven't done a whole lot with respect to uranium in the last, what, 50 years, maybe, you know? So we have, going from west to east, we've got the Cascade Mountains, the Rocky Mountains. We have the entire middle of the country that are known as the Great Plains, but that's all deposits that have been washed out from the mountains around us. You go back east, you have granite deposits in the Appalachians, and all the way up into Maine. And so we really haven't looked into how much uranium is actually out there that hasn't been discovered yet. One of the ways that uranium was prospected was because of its natural radiation, and actually it started out with people doing it on foot, and then doing it in airplanes with detectors that would look for increased background radiation, and then they would explore that on land. It was very, very difficult to do it, but now things have changed. The technology that we use for prospecting has changed. So I suspect that we're going to find that there may be more uranium deposits that are available to us than in the past. But yeah, David is absolutely correct. Kazakhstan's right now processing more uranium than anybody else in the world. And Canada has a substantial amount of uranium that is available. But you look at Canada and look at its geology, and you can see why. But we're not without our geology here in the United States. So the research needs to be done on the availability of uranium deposits and what's going on in the mining industry to get it out of the ground. Paul, do you want to add anything?
Yeah, I think the answer to why it hasn't been done is the demand for it has been met. So if you build it, they will come, like that movie, baseball movie. So as these technologies develop and begin to deploy, well, the demand for this material is going to increase. Likewise, there's going to be funds available to do some of this prospecting Dave talks about, as well as all the way through the supply chain in terms of development to meet the demand. So, David mentioned we had a couple of partners. Well, those folks represent demand. Those are not, hey, we're going to design this reactor and put it on the market, see who buys it. We have people that if we had that thing done and ready to go in a box right now, we'd be selling. We wouldn't be having this discussion. So, I think it's that part of the supply chain will develop as the demand develops.
Let me add something on the prospecting side, because I just remembered a technology that is important. And guys, this is weird. It's called muon tomography. It actually uses cosmic ray muons to detect heavy elements like uranium. It was specifically designed about 15 years ago or so for Homeland Security operations and detection of heavy metals and like uranium. But now it has been used in, let's say, scanning an entire mountain to see what's inside the mountain and to see what kind of heavy metals are contained within the mountain. So the way that prospecting has changed to find uranium has significantly changed over the years. I just throw that out there for what it's worth. I think Paul is absolutely correct. We haven't done much because we haven't needed it. And now, as we know, it is really going to the demand is going to increase with where we're going with the micro reactors and small modular reactors.
Yeah, and I think it's the supply is going to come on a lot more slowly because whether it's uranium or palladium or copper or gold, silver, I mean, it's one thing to locate it. It's another thing to actually get a mine in place, get the permitting in place, as we know that there's such opposition to any new development, particularly in the West and North America, but even in some of the emerging countries now. You look at some of the battles over lithium and copper in Chile. So it's, I think, you got to look at when you're assessing a commodity market, you got to look at the supply curve and the demand curve and also just the time factor. And I think right now the time factor is much more in favor of demand going up a faster, steeper slope than supply. All right, well, I apologize that we're talking so much about nuclear power, but it is a fascinating topic. And if you people want to keep talking about it, keep asking those questions. But I want you to take what time we have left and go your route with it.
Well, we're coming up on our hour and a few minutes here, but Marco, do you want to have the last question here?
Yeah, can y'all hear me now?
Yeah.
Yes, you're good.
Do you trust CPI enough to buy tips? And if so, at what tenor and what yield would you start considering tips?
Great question. And I don't know. I just think there's better ways to hedge inflation and even protect a cash flow from inflation for the exact reason you describe. I'm very suspicious of these government inflation statistics, at least now. I didn't used to be, but I think there's so much pressure on the federal powers that be and the bean counters to underreport inflation for obvious reasons. I mean, even Social Security spending goes up when the CPI goes up. And it seems to me a very flawed calculation. I have seen those people that do want to play that game that you're talking about with instead of the Treasury inflation protected securities, they recommend the break evens. Because the problem you've got with tips is that you've got duration at risk. In other words, if you can make money on your inflation call, but then because inflation runs hotter than projected, but then that hurts the bond side of the component. Now you can try to massage out of it by going with shorter maturities, but I would think maybe these break evens are the better way to play, where it's just a pure market driven inflation calculation. But even there, I don't think the market is properly anticipating what future inflation is likely to be. In other words, I think it's under anticipating where inflation is going to be over the next 5 years. So I would rather get my cash flow from something like an energy stock where you get a nice yield, and some of these midstream ones, the pipeline operators, where their distribution enterprise products specifically, where it goes up almost every quarter, but every year well above inflation, and we're getting a yield of, I think right now it's about a 6.5% current cash flow yield. So I think there's better ways to do it, but I mean, we still have to have bonds. I guess I would just say that, maybe stay with corporate bonds with relatively short maturities and where you're getting paid. Unfortunately, credit spreads right now are really tight. That's the difference between what corporate bonds pay and treasuries pay. So we're not really wild about that. I think mortgage-backed securities make some sense. They're pretty short duration. So keeping your maturity short in an inflationary era is very important. Anybody else? Or Adam, I don't think we did ask the question about Honeywell, right? And I
Yeah.
brought up Honeywell. So Honeywell is an
Yeah.
interesting stock price chart. The chart looks quite good. It looks like it's trying to break out. It doesn't look that inexpensive. I mean, there's so many other companies out there that trade it, in that 15 to 20 multiple that are really good companies. But Honeywell's more like low 20s, which isn't outrageous. I mean, considering Costco is trading at 55 times, and it's a great company, don't get me wrong, but 55 times earnings for Costco, have a hard time with that one. Anyway, our company has a position there, but we've been cutting down on it at this price, and probably will do more after the first of the year. It's a huge gain. But yeah, it's I guess what I would say with Honeywell is keep an eye on this ConverDyn, because there's rumors you're going to spin it off. And a lot of times these spinoffs are kind of orphans when they first come out. And that could be the most attractive part of Honeywell. So that's my Honeywell thought. There was one other question from that individual, Adam. What was it?
Let's see. Well, he was asking about Honeywell being close to a range expansion and
Yep.
Elliott taking a 5 billion stake, but I think you already touched on
Yep.
that.
Yeah, I mean, it does look good from a chart standpoint, but it hasn't quite broken out. It looks like it's trying to. So if you don't know, if anybody listening, I'll just mention, because this is a very important thing. I think if you look at these stock charts, where really the big winners come from is where they've been in a long basing process, where they've been in a range, say 20 to 30 for a period of years, and then they break decisively above 30. And frankly, when they break below, that's a huge warning sign. But you got to, I mean, that's not magic. You got to do some fundamental research, and we like to see situations where the price is breaking out and the earnings are breaking out at the same time. And you can go back and look at Microsoft in 2013 or Apple around that same time, and great earnings being reported. The stocks were very cheap, and then they broke above their 2000 bubble highs, and it was off to the races.
I mean, another question. Oh, Marco, do you want to chime
Yeah.
in again?
This is a quick question. US X technology versus Japan and Europe X technology. Is the US still that much more expensive?
Supposedly that even if you take out the Magnificent Seven, so I guess that would still include a lot of tech stocks, the 493 still traded at a significant premium to the rest of the world. I know I saw a visual on that not too long ago. I think the multiple goes down, into the upper teens, so it's lower because right now the overall S&P is trading about 22 times forecasted earnings, maybe a little lower than that after the correction, although we're getting a rally today. But again, these earnings, you got to be a little careful. I think the quality of earnings reported in the United States is not great, and it tends to be not even worse when you get late into a cycle where management plays a lot of games to try to enhance their profitability, which of course allows them their options to be exercised, and they cash those in. And so it's I don't know. I think it's a little bit of a con game, frankly, out there right now. But that's not meant to tar everybody with a brush, because there's a lot of companies that use very conservative accounting, and I think in the long run you want to own those.
So his next question was, I know we've spent quite a bit of time talking about SMRs, but obviously we talked about micronuclear not being publicly traded, but he was asking about how you would play SMRs using publicly traded companies.
It's really tough. I mean, that I've already mentioned NuScale and Corvallis, and their ticker symbol is literally SMR for small modular reactor, and it's just unbelievably expensive. So, and the way to play uranium typically is you buy Cameco, which is basically the Exxon of the nuclear industry based in Canada, but it's also very, very pricey. It's tough. I just don't see any of them that look good from an investment standpoint, and that's why I keep defaulting back to uranium itself. I think that's your lower risk way to play it right now.
He mentions Oklo, which is a pretty trendy name because of Sam Altman,
Yeah.
but I don't know how viable their technology is at this point.
Well, Chris Wright's on the board. He's the incoming Treasury Secretary, very, very successful oil and gas guy, oil service company, Liberty. It's Paul and Dave know more about the technology. I would suspect the technology is valid, but if you look at Bill Gates's SMR, which is Terra, that's been an absolute sinkhole for capital. And what's impressed me about micronuclear is how much they've been able to develop with so little capital investment, whereas these other guys have blown through hundreds of millions of dollars, if not over $1 billion. But I don't know. I would tell you from everyone I've looked at, it's hard to get excited about the valuation. There's an awful lot of blue sky, a lot of optimism built in those stock prices.
Okay, well, that's, I think, it. And we are a little over time. So unless you have any final thoughts.
Well, I just want to say happy holidays, Merry Christmas to everybody. I really appreciate you joining us, especially this time of year. I know that it's a lot more attractive to be with your family than to listen to me ramble, but thank you. And we'll talk to you in 2025.
Thank you for the opportunity, David.
Thank you very much.
Thank you.
Bye, everybody.